We're expecting the unemployment rate to remain steady at 6%. On average, that would mean that employment growth is slowing.
Janu Chan, welcome back to Dukascopy TV. Always a pleasure to see you.
Thank you. Thanks for having me again.
No problem at all. Now let's take a look at the Australian economy, diving straight in. We've got a bit of a triple threat going on at the moment. So let's start with the Australian dollar, which has just pared back from 8-month highs on a pullback in commodity prices. We're seeing still, though, a lot of support at these higher levels from that risk sentiment. Can the Reserve Bank sort of kiss goodbye to that downward trend that they were really hoping for?
Well, the RBA has said that they would welcome a lower currency, but only because they want more stimulus. I don't think they feel as though the Australian dollar has to be lower in comparison to fundamentals. It doesn't think that it's out of line with where commodity prices are. In saying that, well, we think that the Aussie dollar is vulnerable to being sold off in the short term, and that's because some of the things that have driven the Aussie up to above 74 cents, they could be a little bit temporary. For example, economic growth that was stronger than expected, but there are still some challenges for the economic outlook in Australia. Still good news though. The other thing was commodity prices. We had a big shoot up in iron ore prices, and I think there's question marks about whether that can be sustained because the outlook for the steel demand is still a little bit uncertain and probably likely to remain weak. So all of these factors, if we see that reversal, particularly if we see a reversal in sentiment and that can turn quite quickly, then it is likely that the Aussie dollar could ease off from these high levels.
Well, you touched there on that commodity price outlook, and whilst we have seen a spike sort of in the very, very, very short term basis on iron ore and also oil prices, over the longer term, particularly for the Australian mining sector, commodity prices really are painfully low for that fragile sector. Now, the Australian economy has been in or attempting to transition away from mining services and really looking at non-mining sectors for economic growth in the future. Are we seeing any signs that that transition is progressing?
Actually, it is, and Australian economy is doing very well considering we're seeing that big drag from lower commodity prices and mining investment coming off these really high peaks. And the evidence is in economic growth. Economic growth was stronger than expected, as I just said. It's running at an annual pace of 3% in the year to the December quarter, and that's despite the fact we did see the big drag from mining investment. So that is evidence that other sectors of the economy are helping to do some of the heavy lifting. We've got the labour market, that's in good shape as well, and business surveys, they are indicating that conditions outside of mining, they're at average or above average levels, so really good signs that non-mining is acting to help take the reins of growth.
Now, obviously, we had a huge data haul last week. This week, we've seen consumer confidence data come in not as high as perhaps anticipated off the back of what's been cited as being concerns over volatile financial markets. We've got a lot of political tensions going on at present also. Are these representative, do you think, of the concerns of the average Australian on the street, outside of the sectors and circles that we consider anyway?
Well, I think it's not too surprising that we did see consumer sentiment fall a little bit, considering we've got this turmoil in financial markets, and there has been a lot of negative press around the budget, taxation, GST, negative gearing. So in a sense, that's not too surprising. I think for the everyday Australian, though, these factors are more short-term factors that might weigh into their psyche, and sentiment. What they're more concerned about is the labour market and whether they're in a job and job security. And I think on that front, things are looking quite good for them because, the labour market has been tracking quite well.
So with that said then, I mean, we've got labour market data due out next week. Where are you pitching this? What's St George's forecast?
We're expecting a 20k increase, so quite a solid increase in the month following some weaker outcomes in the previous months. We're expecting the unemployment rate to remain steady at 6%. On average, that would mean that employment growth is slowing from a very strong pace towards the second half of last year. But at the same time, we're expecting employment to still grow at a pace that's strong enough to keep the unemployment rate steady.
Janu Chan, always a pleasure. Thank you so much for the update.
Thanks again, Natalie.
Janu Chan then of St George, giving us all the very latest looking at the Australian economy. Do stay tuned to plenty more exclusive interviews coming up right here from the heart of the APAC region. I'm Natalie MacDonald. You've been watching Sydney Direct on Dukascopy TV. Until next time, it's goodbye.